Everyone, it is Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you'd please type number 1 in the chat box, let me know that you can. I would greatly, truly, wonderfully appreciate it. Thank you so very, very much. I love all of the deviations of what a 1 looks like. A number 3, a 1.618. Typed in the word 1, the number 1. Afternoon. Thanks, Jim. Appreciate it. Roby, I saw your trade today. I'll read that out in a little bit. That is awesome. Great job on that. Cool. All right, loud and clear. All right, I appreciate it. Thank you, one and all. I know my team has been voraciously trying to get me a new PowerPoint because I wanted one thing modified on there. Let's see. It looks like we might got it now. So let me go ahead and get rid of that. Let's go bring up that, hopefully. All right. I think hopefully this one's good. I didn't check it, but hopefully it's good. All right, fantastic. So as we get started here, keep in mind that everything we look at is for educational purposes. Nothing's meant to be advice or recommendation. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. I spent a bunch of time on this over the weekend with our Inner Circle group, just hitting it on this is what it means to be risk profile, risk tolerance. We went into that a bit. I actually laid out some examples in there through our training, which I think was extremely helpful to be able to really step into it and really divulge some of that. So that was a great class, great training in there. So as we get going here, we've got Inner Circle coming up on the 30th, which is tonight, 7 o'clock. On the 31st, we have Mastermind Group, which is tomorrow. E-mini is on the 1st. Trading You on November 1st. Tonight is also Trading You Live 2.0. So that comes right after Inner Circle at 8 p.m. And then we are doing November 4th. Well, that would be 1, 2, 3, 4. 4th would be Saturday. And you'll notice it says it starts at 9 a.m. Okay. I think we've got 5 or 6 hours planned for that day. Hopefully you can make all of it. If you can't, you can only make some of the time that's there. It'll be time well spent. My goal is to have everything from the Trading You 2.0 complete in this month of November. You still have an opportunity to jump in there if you want to. I mean, we have people still doing it, still joining us for the very first time. So if you want to get in there and catch up on it, you certainly can. We've hit a bunch of the core trainings at this point, or the preliminary trainings. We're really getting into the meat and potatoes at this point of it now, starting out with last week, and then, of course, tonight into this weekend. Plus, we've already done 5 of our 6 coaches have done their trainings as well. So we have got a lot happening in that area there. So you got power option plays, covered call, E-mini Vegas spreads on regular schedule, as is Power Hour and Trading Coaches Playbook. Okay. Let's see. Here's our followers page. Make sure you follow along. Listen, I think a good strategy is 1 month for the month, pick a new platform to follow us on. Right. I mean, right now we're doing a lot of stuff on TikTok. Sean's creating all kinds of videos for YouTube. Our podcast is still thriving. We're very excited about how the podcast is going. So really like it a lot. So make sure you check out the various platforms. Here's our Trading Boss Manifesto. This is what it is to be a trading boss, what it is for you to be part of the Wealth Builders community. This is how I define it. My team agreed with it. You know, we kind of tweaked it for a long time to bring this to fruition. So you can download this right on the homepage. You can download it on the tradinglikeaboss.com. You can download it on robertjroy.com as well. Monster Market Movers is coming up. It is next week, I believe. Not this week, next week. But as our Halloween special, folks, it is normally $49 for the very first one. You can now get it for $29 if you're not already a subscriber for your first one. Then if you decide to stay with it, it's $199 after that. But Lee just dropped a link in there. Can you drop in the coupon code as well, Lee, for that? I would appreciate that. But there's your link. You can go and set that up. I know it should be in the emails that we sent out as well. I did see a couple of people register for it this morning. Spooky. There you go. Capital S. Spooky Yeah, Paula said they just did. There you go. Spooky is the code, so take advantage of that. All right. Oh, I don't want to show that just yet. So, what trades did you do? Drop them in. I want to see the trades you took out there today. Let's see what's happening out there. And I'm going to bring back up to the top. Remember, this entire section, this entire segue, this entire component is about two things. Number one, it is your accountability measure. It is you getting out there, whatever you believe, whether you're a faith believer, whether you are a universe believer, whether you worship a head of lettuce, I don't care, okay? It's getting it out to the universe. It's getting it out there. You saying it, I'm doing this, right? It really puts you in a different realm. And to give a great example of it, I do my best to try to a couple times a week to get to the gym whenever possible, assuming I'm in town and so forth, right? And when I do, my energy level is off the charts. I get so much more accomplished in that day. You know, it's a much better, I'm a much better version of me when I can, right? Well, it's no different when you're trading. If you're out there and you're talking about your trades and you're doing the trades, even non-funded, and you're throwing them out there for everybody else here to see, all you're doing is putting the cherry on the top at that point. That's exactly what that did. And listen, I understand you may not trade every day, and that's okay. Put that in. Hey, I didn't get any trades off today. Hey, it was a crazy day today. Man, I found garbage out there. Nothing for me at all, right? I understand all of that, and I'm good with that. So Roby had typed in, before we even got started, Roby had typed in, sold 20 CSPs at $10 on Lyft for 23 cents last week per Covered Call Explorer subscription. Bought them back Friday for 5 cents. Nice call, guys. Missed that on S. That's okay. That was another nice one, too. So remember, Tripp is now running and doing Covered Call Explorer. He's got a slightly different belief system and what he looks for than I do. But, man, I'm watching his candidates every week, and he is crushing it week after week. So, check that out if you haven't already. Let me scroll down a little bit and see what else you guys came up with. Let's see. Tripp said made 77.5% in 18 minutes on the SPY with the Hakanashi scalp. Boom! Yes, absolutely. Good job, Tripp. John put in Wheel of Fortune on Oracle. Oh, wow. I ain't heard that name in forever, John, right? I traded the dickens out of Oracle for years, covered calls. Oracle and Overstock.com, naked puts on Roku and UBXY, which is the VIX, right? The volatility index. Cash flow, $1,400. Nice job. Paula said 3% on the SPY and 4% on the Qs. I love it. Paul, if you can just get 2% on the SPY and 2% on the Qs, you can only do it 3 days a week. That's 4, 8, 12% a week. I mean, dang, how long does it take to double your account? Not long, baby. Not long at all. Right? Let's see. Erica said, still in the SPY and Google practice trade. Jim said, I did not get off any trades this morning. There you go. PK said, only got one contract off on Netflix for $65. Yeah, but Netflix is a little bit higher price position too, right, PK? So on a Monday, right, even if you only got one contract off today, you got in the trade, you hit enter, funded, non-funded, doesn't matter. You went through the process of hitting enter. Is Will in here? He's not. So one of our students, who's in our inner circle, he'll be the first one to tell you. Right, he will at any given time, in a week, have 20, 30 trades go off in a week, right? And he's some funded, some non-funded. He is a big believer of hitting enter, hitting enter, hitting enter, right? And so many, the funny thing is, so many of the students that are in our inner circle, and of course our mastermind, which is a progression up towards inner circle, that are taking those steps and learning how to do this properly, push the button. Exactly. Tripp types in push the button. I won't say who that normally follows. Is he in here yet? No, he's not. Okay. Push the button, right? One student who needs some encouragement to push the button. And we all need the encouragement, right? Oh, Rob, I'm under the weather. I'm this, I'm that. Yeah, I get it. I get it. Leaving for the gym at 5:45 in the morning ain't fun, right? The second you get outside, the crisp air hits, you walk into the car, feet are moving. You're already in the motion. You're in the mindset. It's time to go. It's no different with trading. Right? Get your feet moving. And if you have to, get up on a walking, a moving desk, or you look at Dr. Greger, who he walks for 5-6 hours a day, very slow pace, feet are barely moving, but man, his body's rocking, he's moving, right? Do whatever you have to do to get your body going there, to get your juices up. For me, I didn't get any trades off today. Nothing I saw was really exciting. And when we get into the SPY in a few minutes, you'll understand why I chose not to. I mean, the SPX. You'll understand why I chose not to take anything today. Pivot points really didn't excite me the way they look. Let me just mute this. Pivot points really did not excite me the way that they looked. So I passed on that trade. And I'm just waiting. I'm setting up, and I'll tell you exactly what it is that I'm looking for and waiting for over the next couple of days to happen before it is time for me to consider jumping in, right? But with that, we go back here. We have got a trade from Amelia, right? So same one. It looks like we got the same thing there. Okay, so just going to leave it on this page here. So this was on IWM Mary, right? This happened at 9:53 this morning, 10:07. She's out of the trade. She did 5 contracts of IWM. It was a half gap fill, right? So she did the 165 puts. We got this huge move to the upside. She entered the trade right here, right? She got in here and traded to the downside, right? She bought puts. She got in at 165. She got out at 188. We got down to that next fib line. Down there, she got out at 188. So 65, 75, 85, 23 cents. 1 contract, $23. 5 contracts, $115. How did you do that so fast? I just did 10 in my head and cut it in half because I can't do 23 times 500. It doesn't work for me, right? Too much thinking for me. But great job, Amelia. Great job, all of you. Congratulations. Fantastic. I love seeing it. Y'all are doing great. I love the excitement. I love how many of you have put in comments of great job, everybody. Appreciate it. Thank yous and so forth. So really, really, really awesome. All right. I want to look at the S&P 500 at this point. So we're going to jump over here. I'm going to just put on a ceiling fan. So humidity is pretty high today with the rain. I'm just looking down and it's 79 degrees in my office. I don't want it. It's too hot today. Too humid. All right. So a lot of lines on my chart. They have to be there. They will remain there. I refuse to take them off yet at this point. There's way too many things happening that could or may not come back to fruition. Okay. So we're going to back this up. I'm going to take the symbol grid down for now. We're going to back this puppy up, right? And let's see, today's Monday, Friday, Thursday, Wednesday, Tuesday, Monday of last week. So this is where we left off, okay? And if you remember, we were up a little bit. I'm almost positive. We were up a little bit last week when we got together. All right, Jim, you're right on track. Jim typed it in. He's calling it, baby. Highway to the danger zone. That may be a good way of looking at it, Brenda. But from what I remember, if we go back, I don't know what I want to do. Get the S&P 500 up there first. Let's go into a 30-minute chart. Last Monday was the 23rd. Right, that's 1823 right here. So last Monday was the 23rd, okay? And, 12:30, 12 o'clock. So right there, 12 o'clock, we were up. From where we had closed, we were up so we did not have, when you look at the candle that we've got here for that Monday, we did not close the way we were, right? We had already pulled down on that first candle, but we had come back dramatically. Again, 12 o'clock was here. 1 o'clock was here, right? So we'd hit the high of the day-ish between that 1 and 1:30 candle by pennies. But somewhere in there, we hit the high of the day, and then we rolled over. So we're looking at a bullish candle that had recovered so far for the day, right? It was awesome, right? Stretched all the way up to the highs, came back at the end of the day. Now, if we go from there and start working forward, that's Monday. Tuesday, we get a gap up. Right, nice gap. We gap open to the 42.35, which is the 0.618. The next day on the 25th, which was Wednesday, we failed wonderfully. Nice gap below the 42.35. We really didn't get a retest. Our open was 42.32.42. Wow. Lots of fours and twos. 42.32 and a half, we'll call it. Our high was the same price, 42.32.42. So we had a shaved top, no wick sticking out the top of that thing, and we just went kerplunk. What happened? We gapped down to the 618, and we played ping pong between the 618 and that next fib line, that 41.85.28 level. Nice, right? And then right below that, is the 41.81. That horizontal black line that has been in our face for such a long time now, and the approach of it was eminent as far as I've been concerned, and I've been very vocal about that. You'll hear me this Thursday when I get on Benzinga show. We'll be talking about that 41.81. That's exactly where I planned that it was going to go. And you know, on this day here, on Monday, I got up and did Power Hour on Tuesday, right? And with this day, I'm like, listen, you can't say it, baby. We hit it, right? As far as I'm concerned, we hit the 41.81 here, even though the low had only got down to 41.89 on a $4,000 index to miss by 9 points. We hit it. Support doesn't happen exactly at support. It's just above. It's just below. It's right around there. It's not exact. It's a range. It's not a dot. It's not a definitive line on a chart. Okay. And then on Wednesday, we came down and we just missed it again. We had a low of 41.81.42. So 42 cents off. That I said we just crushed it. We nailed it. We closed right about the fib line. The next day, Thursday, we gapped down. We stretched back up to the 41.81 and we fell wonderfully, actually, off of that. It was amazing, the pullback that we had off of that, right? I was out of town last week for a couple of days at one of the masterminds that I belong to. And I'm looking at charts, and there's a lot of business owners that I'm with, and some of them trade the market, some don't, but everybody's interested in what's going on with the market, right? It's a financial institution, it's money, right? Business, okay? And people are gathering around. We're looking at my Omega charts. I've got a second monitor open. I've got TradeStation going on the second monitor, and I'm going back and forth here between what we're doing. And you watch that fail off of that 41.81, and it was just a wonderful setup, right? And then on that day, Thursday, we broke this line. It's like, well, what the heck is that line? Well, that's in the middle of nowhere. It's not a fibit, right? 41.46.36. Well, that is the 10% correction from the 52-week high. Yes, baby. Just what I was looking for, right? So we broke down through it. We retested it and failed on Friday miserably. Another game of ping pong right down to that 41.04 level, right? We've got a blue zone between 41.0398 and 41. We got to a low on Friday of 41.0442. So 44 cents above that is as close as we got, which pretty dang close. I like it, and I mean I like it a lot. A whole flipping lot. Okay, wonderful. So now what? Today we get a gap up, right? And we gap up right back to the 10% correction. That is a critical line. You should have that on your chart right now. Period. The end. Make sure you've got a line drawn there. I've got a 20% for correction line drawn in there also right now. I don't know if we're going to get down there. It really just depends what happens with Israel and a little bit of Ukraine. Some of that is kind of, I don't want to say overplayed. I mean, obviously we still feel bad for what's going on everywhere around the world with stuff like this, but it's been out there for a long time. So I don't know how much, unless big news comes out somewhere, I don't know how much that will play a part in our markets. I mean, there's plenty of other news out there. I mean, no different than the news I get when my buddy calls me. Is in my mastermind group to tell me that we finally picked a speaker in the house, right? That he was just stoked. He's like, I don't know if you saw it yet. But that's good news, right? That's good news out there. That we finally got that taken care of. But not market-driven news that is pushing yay or nay, right? It may become because of the potential shutdown coming up shortly. Will the House get some things passed or not, and so forth, right? Will there be an agreement in there between the government? I don't know. But we are right now sitting in a true bearish bias. What the heck does that mean? Three moving averages. And the important thing is they're spreading apart. Look at the distance in here between the 8 and 21, the green and pink. It's getting wider. Look at the distance between the 21 and the 55. It's getting wider. They're spreading apart. That's an indication of strength in the overall trend. So when I look at the pullback around the 10% correction line, I'm in position 1 in the chair. And I am not very excited at flipping all about this. Yeah, we had some movement. Yes, there were some positions you might have chose to trade. And I'm not faulting anybody for it. Remember, your personal risk profile and risk tolerance. I am maybe a little more cautious is not the right word. I don't know why devious came to my mind, but that's not it. I've got a little more of a plan on how I want to attack it. Right? I got a little more of a plan on how I want to attack it. Today didn't have to be that day. Right? It's a Monday. It's a crazy day for me as it is. Meetings and things start right out of the gate early on a Monday morning for me. And they're long days. So I'm okay with it. My day started this morning with no exaggeration at 5:30. I was at my desk at 5:30 getting some stuff done. I was gone for the gym right after that. Got back, jumped right into some work from there, and I've been going ever since this morning. Yeah, ever since I got back. So I was at the gym a little over an hour. So I've been going ever since, and I'll take a small breather in the afternoon because I teach tonight until 10 o'clock with Trading You, right? Live 2.0. So Mondays are long days, no matter how you slice it. So I am looking at this saying, if we can move up, and Jim typed this in and said, before you say it, I'm thinking you're waiting for the SPX to come back to the 41.81 and fail to get in. Yes. Now, what were their positions to trade today? Well, there were positions like Tesla, who was down 8 and change right before we got started, right? I didn't get that one. Not good, not bad, just is, okay? Just not one that I wound up picking up. We had the bounce today, decent bounce in the market. Today we're up 27.5 points right now on the S&P. So we had a decent bounce, right? But, you know, just nothing about it is jumping out at me saying, ooh, take this trade, take this trade, take this trade, okay? So we could pull up to the 41.81, and I really wouldn't be too disappointed if it took me 4 or 5 days to get there because my downtrend line intersects with my 41.81 right here. So we can get up in that area closer to that. I like it a lot because now it gives me another confluence. 41.81, fib line and downtrend line. Thank you very much. Right? I'll take it. I'll take it. Let's see. Tripp said the ES reached right up to the 41.84 and rolled over. Go figure, huh? Good, Brendan. Added that 41.46 in. Excellent. Jim said the FOMC this Wednesday, CME shows 98.3 of not raising rates with the 8 moving average and other lines looking for confluence. It looks like a good possible fail on Wednesday. So with the Fed itself, you all hopefully do know this already, but I'm going to say it just to reiterate it. And that is, how do I want to say it? Guys, it is not about the rate hike, right? Yes, we know. We're expecting no rate hike, 98.3% of no rate hike. We're expecting it. That's important, but not the most important thing. The most important thing, it's very simple. 3 words, forward-looking statement. What's next? We're already planning on no rate hike from his last announcement, from what we're showing right now in the numbers. Now, he did make in his last announcement that things aren't looking so good. We don't know yet, but we may gotta have to come back to raising rates again. We're really not sure yet. Okay. So you gotta listen to what really is being said there. Okay. So Tripp said 95% no change, 5% of lower or zero raise. So 95% chance of no increase, 5% chance of having zero increase, lowering of the rates, right? Which I don't foresee that happening yet. That would be a massive explosion in the market if we did that. Sure, Charles, I said on the 41.81, I was going to, did you get it that time? No. Charles, like, what are you going to do on the 4181? Whoa, 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 whoa. On the 4181, Charles, I am looking for a retest of the 4181. Let me unscrunch that. Looking for a retest of the 4181 and a fail. And then I'm looking at everything pure bearish. If that position is in a bearish bias, I just cleaned my desk up. Make it presentable for power hour, right? So I put away my tracking sheet from Pop, right? There were only 4 stocks that I would look at and go, maybe not for the downside. Amazon wasn't a bearish neutral bias, and this is as of yesterday, right? Over the weekend. Amazon was a bearish neutral bias, so it may come down to bearish, probably not on a day like today, right? And then we had Chipotle, Netflix, and United Healthcare were all in some form of bullish bias. So I'm not looking at those. If the market is bullish on those, be bullish on those. That leaves me 16 other positions that were bearish. Now, we've got a pop in the market today. This could change things a little bit. We'll see. But I know that I can run through this list, and as fast as I can write the letter down is how long it takes me to go through my list of 20 stocks and say yay or nay, I want this one on my list, right? Meaning bullish, bearish, and so forth, right? So if we look, we'll start with Apple. You ready? All right. Apple is bearish, so I'd write down the letter D. I'm not going to go this slow. All right, bearish, bearish, bullish, bearish, bullish, bearish, bear, 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 bull, bear. That's all it is, bear. That's how long it takes me to do this. Bear, 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 and neutral. Aha. Bullish neutral, sorry. Bullish neutral. All right. And then last one is W day is bearish. That's it. A minute, maybe a minute and a half. Okay. To go through and I write them down. I just look at the screen, write them down on this paper. Right. Everything is written down. I can't see my own camera. I got it hidden. There you go. Let's see. So right here, this column right here. Right. I type them up for the students in Power Option Plays because you can't read my handwriting. I used to take a picture of this and share the picture. The 10 minutes it takes me to fill this page out is much better off for y'all. So you're not trying to read this puppy, right? With my chicken scratch on it. But that's it. So I already know what ones I'll be looking at next. Look at Apple. We got a bullish day, not Apple, W day. We got a bullish day going on today, and we're still getting some failure in there, right? Amazon was bullish neutral yesterday, went to bullish, right? So now what? Well, actually they were bearish neutral, sorry. They were bearish neutral. Now we're in bullish territory. From bearish neutral to bullish in 2 days, right? Powerful stuff. So we've had a really nice move on the S&P 500. We really have to keep our eye on what's going on. Today is a rest day. We've had 3 major move days to the downside. I mean, major move days to the downside. Every one of them racking up on a fib line, or the other one was my 10% correction. Going right to it. You know, the pullback here on Wednesday was right to the fib line. Thursday was through, not at, but through the 10% pullback, the correction. And Friday was right to the fib line. Today, Monday, we gap up to the fib line, right? Actually, not the fib. That is the 10% correction line right there. All right. So, okay, listen, when I spend this kind of time, because it was a lot, when I spend this kind of time and walk you through everything on the S&P 500, does that help at all? Is that something that I should continue to do? Try to remember more often to add when possible? 1 for yes, 2 for no. Listen, you're welcome to type in words like yes, like Brenda said, yes, please, capital letters, bunch of exclamations, right? You're welcome to do that. I just try to make it easy, you know, for some of you that are less likely to put something in because you are a 1 or 2 finger typer like me, right? 1, yes. All right, cool. Okay, good. All right. So let me take you back in here. Let's talk about a topic for today of moving average magic. Never trade without them. There you go, Brenda. You got it, dear. I'm glad it was helpful. Good. Moving average magic, never trade without them. I'm going to preface with this. You do you. My moving averages are not the only ones that work. Right? I know individuals that use different settings than I do. I know individuals that are using just very weird settings. One in particular, gentleman that is using fib numbers, but he's using more of the 0.618 type stuff and 61.8%. And right, he's using some stranger numbers on his moving averages, like it's a Fibonacci. And we're going to get into some of that. Not here. All right, we're going to get into some of that next, probably the end of first quarter, beginning of second quarter. One of those two in there. We are going to do a full, what I believe will be a full 2-day live training. I may do it over 4 weekends or 4 weekends. I don't know how, but I'm probably not going to do it all in one, in full days. But we are going to do similar to what I'm doing right now on Trading You 2.0 Live. I am going to do a live training on Fibonacci's. I don't know. I love the idea that you go back and watch it again and again, but if you have the opportunity to step in and ask those questions right up front, man, I am just stoked about being able to do that, okay? And that's exactly what we're going to do there. Inside of there, some of the advanced stuff that I really have not taught before are how I use Fibonacci's with moving averages, how I use Fibonacci's on trends, on channels. Channels I've taught some, particularly to some of our higher level trainings, Inner Circle, Mastermind, and so forth, right? Yeah. So when it comes to moving averages, mine are not the only ones that work. Here's the reason I use mine. And what does that mean, mine? I am a Fibonacci trader, but I am a show me the money trader. If 7 and 643.5 work best, that's the ones I'm going to use. Nothing to do with Fibonacci. 643.5 is not a Fibonacci number. Okay? I'm going to use whatever is best. And here's why I say that. I went ahead and back tested un poco, just a small amount of days with various moving average settings to determine the best settings based on a moving average cross. And when I did the analysis, right, when I said it was a small sampling, it was a small sampling of overall, right? Because I did 4.5 million days of back testing to determine, to me, what were the best ones for my style of trading. And that came down to the 8 and 21. They were the absolute best moving averages that I could find out there. Now, if they were 10 and 20, if they were 16 and 38, I don't care. I would use whatever it was to give me the best, most reliable moving average cross, right? So from that, I built an entire system out on moving averages, how we use them, how to trade them, and so forth, right? But they are added to my charts all the time. My primary template is laced with 3, for the most part, 3 moving averages, but I really do use 4. But the fourth one, that fourth one only comes in when we do a swing trade. So the primary moving average is my primary. Oh, let me just get my drawing tools. I quasi opened it, but never finished it. My primary are 8 and 21. And my secondary is a 55. Right? My additional one, or my bonus one, is only for swing trades, and that's a 5. That's only for exiting, for a certain type of exit on a swing trade. All of these are EMAs, exponential moving averages. What does exponential moving average mean? Some of you may not even realize there are multiple types of, and there's a lot more than just SMA and EMA. SMA is simple, EMA is exponential. Exponential says we put the most emphasis on today. A little bit less on yesterday, a little bit less the day before, a little bit less the day before that, until you go back 8 days, 21 days, 55 days. We have the least emphasis of importance on today. Think of that. 55 days ago and today. 55 days ago matters, but not like today does. Right? So exponentially, I put more emphasis today than I do in history. Simple moving average says every day gets the same weight. Now, that would mean the 55 moving average has the same weight as the 1 day moving average 55 days ago, and that's not me. I like exponential moving averages. Anything higher than 55, meaning 56 and above, would become exponential. A 55.00000001 would become a simple moving average. So, Rob, but I'm using 10 and 20. You're using 8 and 21. So how much of a difference is there? There's not much. There's not much. You just have to ask yourself a question. Where did 10 and 20 come from? 10, 20. It's easy math. It's easy for somebody to remember, right? Oh, self-fulfilling prophecy. Maybe. You will not see that much of a difference on 8 and 21 versus 10 and 20, but I got a better moving average cross on the 8 and 21 than I do on the 10 and 20. So guess what? I'm going to focus on the 8 and 21. You do you. You can do your own tests, go back and do your own setups, your own systems. I will show you the tool that I built to do it. It's not an easy task. It took months to get it all calculated, but we were able to do it. All right, let me see. We've got a comment here. So Gwen said, and that gets confusing. What about stochastics RSI? I've seen reliable predictions with those for entries and exits. What is your review on that? Would love to know. So Gwen, listen, other technical indicators I have zero issues with. I mean, for me personally, here, everything I do is on 2 templates. I'm going to share it with you right now. Take screenshots if you want. Every setting is on there. Everything is right on my screens. I hide nothing about the indicators, and here's why. Right? Someone that's got a magic indicator that they have created, and they've got settings they've determined and all of that, and they want to lock it up and not share the settings with you, that's fine, right? But if you don't know how to use that indicator, what good is it? Doesn't matter. Oh, setting of 9. Now what? You don't know what to do with it. So you got a setting of 9. Exactly, right? All my settings are here. On the top, you can see my moving averages. Look at the settings here. 55 EMA, 5 EMA, 8 EMA, 21 EMA. Right there. That's my top chart on candles. My middle chart is DMI plus and minus with settings of 13 and ADX with a setting of 8. Bottom is CCI. I use 13 and 5 as my settings. Now it's my primary template, but it's my secondary chart, or a second chart that I would use. My first chart, template number 1, my first chart has no indicators on the top. Wildest average true range in the middle with a setting of 13 and volume on the bottom with a moving average on top of that. Right, and that's a 21 simple moving average, because volume I want to weight as simple, not exponential, because it's on an indicator. Now, with that being said, when I have templates that have, and I just taught this in our Trading You, I have templates that have stochastics on it. Right? I have templates that have stochastics. I use them on channels. Right? I have templates that have RSI on them, Bollinger Bands on them, and so forth. Right? It's just a matter of what am I looking for? Right? I don't use a lot of indicators outside of the first template I showed you. I use this to identify my candidates. Once I've done that, I don't really need to use this any longer. Everything I do becomes template number 2, right here. I look at DMI plus and minus and CCI only as me too's. Me too. Everything else is telling me bullish. Oh, look, ADX and DMI are bullish. Okay, go. Me too. But that's what I call Me Too indicators. They're tertiary, not even secondary, but tertiary indicators for me. Okay. Excuse me. Yeah, I missed the last Trading You. This was the 2.0, Gwen, is what this was. That was in 2.0, where I taught that. But there's a training in the historical training in regular Trading You that I did that has moving averages in there as well. Okay. So when we look at this template right here, right? Let me see. There we go. What the heck? Some of you looking at this going, holy flipping mackerel, what just happened? Right? So this template, okay, this template helps me to understand my moving average crosses. The red vertical bars is a bearish moving average cross of the 8 and 21. The green vertical bars is a bullish moving average cross. And if you really want to get wiggy with it, I mean, you can't even see them that far back, right? The bars are so light, so thin. There's a lot of bars. So when I say we did, 4.5 million days, we did a lot of testing to get this answer, okay? But realistically, what I'm looking at is when a moving average crosses, that red bar was the cross day. When that moving average crosses here, how did that trade work out? We had a great move down, a gap down, where to? A fib line, right? To that fib line and a bounce, okay? And a fail. By the way, if you have Omega charts already, this is a template that I have pre-built, right? It's not an expensive template. I think it's $100 and something today for lifetime access. We are changing all of our templates for anybody new, and this is not today, but it's going to happen this new year. There will be an annual subscription to our indicators, right? We have some new indicators coming out, okay? There'll be an annual subscription to them. So if you are interested in this, Lee, drop in that link just in case somebody's interested. Drop in that link for the template here. If you are interested, then you can grab it. If not, that's cool. That's fine. I didn't intend to show this today. I'm just talking the 8 and 21 and figured I would share it with you. All right. But for moving average crosses, and again, you got to understand the how with it, right? And there's a whole training series that's going to come attached to this. But that gap down, yeah, it's a good gap. It's nice. We got a moving average cross, but that's not what I like, right? I didn't like this gap that happened. And actually, the gap down wasn't even my cross. It crossed the next day, right? This one here, I like to cross up. Just didn't give me anything. I love this cross down. Happened right at a confluence of a fib line, right? Open right there, failed, gapped. Beautiful, gorgeous. My norm is right here. This is where I live, is right here, inside of this. So on Apple, I don't want to do this. I'm trying to think if we want to talk this stuff through. Does anybody have a mic that wants to get on with me right now and talk through the setup on Apple? Drop a 1 in if you do, and we'll get your mic turned on. Be a brave soul. No takers. Wow. Yeah, I jump all over that stuff. I have no idea what I'm doing, and I'm volunteering. Yes, me. Take me, please. Take me. Okay, then I will just do it for you instead of with you. How about that? So I'm going to do it. We're going to do it in text chat then. So looking at Apple's chart, the very first thing that I see on Apple, yeah, no, I appreciate that, T. Thanks. All right. The very first thing that I see happening on Apple is my moving averages are in a true bearish bias. What does that mean? The 8 is below the 21. The 21 is below the 55. So I've got 55, 21, 8. They're in the right order and they're spreading apart, which tells me that there is strength in the overall direction. Okay, so Jim did say Apple's earnings are coming out after market on the 2nd. Yes, absolutely. And there's a little E right there. Okay. For this discussion, let's take that out of the picture for now. All right. So what would have to happen for me to want to take a trade on this? Notice I didn't say a bullish trade. I didn't say a bearish trade. I said a trade. What would have to happen? And we're talking day trading. Okay. Got a couple of answers so far. So I'm going to start at the top. The first answer was support at 167. So if we get the support at 167.87, I'm assuming you were talking about a oh, wait a second. I see it, Brenda. I didn't catch it in the beginning. Below all of the averages, support at 167. Right. So I'm not going to take a bullish entry here. True bearish bias. I might take a day trade if the market's screaming and Apple starts going up, but I'm not real excited about that. I'll look for a bearish entry, a bearish trade. Okay. If it breaks the 167.87, retests and drops, I've got some room down to 164, possibly, right? With that. With where it is right now and where it's stretched, I'd love to see it get back up towards, well, let me see what else we've got there. Retest of the 173 Brenda put in, the 171. Jennifer said retest and head down. Charles said retest the fib and the moving average. Okay, so now we're starting to see it. I've got a confluence of the 8 moving average and the fib line, and that one right there is setting up for a big hit. This is, I don't remember who the heck it was. Was it Babe Ruth or Lou Gehrig that stood up at the plate and pointed into out to left field or wherever it was? Who was it that said, I'm going to hit it there? Right? That's what this is, right? This is big time. Moving average, fib line, favored setup. You know, if I go to Adobe right now, okay, I got a moving average near nothing. I got a fib line near nothing. I look at Apple. Man, I like Apple a whole lot better. Oh, magnifique. I love the way Apple looks, right? This is my type of setup. So let's see what else we got in here. Charles retest the fib and the moving average. Retest and head down. Jennifer said PK move to the fib and retrace to the 171.43. And the 8 and fail. Perfect. Retest the 173 and fail was Erica. Retest the 171 and fail. It was Brenda. The EMA and down is Jennifer. Today would have been a good trade. Yeah, could have been. Really could have, Paula. Jim said close at the 8 moving average, then buy puts when it starts to fail in the morning. Okay. John said retest the 171 fib and moving average and move down. It was Babe. Thank you, Tim. Okay. Call your shot. That's it. Call your shot, Trip. So now let me throw a caveat in. This happens tomorrow. We move up and we open right near the fib line and the 8 moving average, and we start to back off. We go down to, we get up right at the 71.43. We go down to 40. I'm sorry, we go down to 171. We go down 170 3/4. We're moving down, right? The setup is there. But the S&P 500 has done this. Ukraine war is over, or Israel, or something happened in the government, whatever it is, right? Something globally, economically, whatever. Powell comes out and drops rates, the market takes off, and Apple is showing weakness. You have to make a decision if you truly want to be in that trade fighting the overall market, right? And what I would tell you is this. For me personally, that is where, and again, we spent a lot of time on this during the weekend, that is where I would look at that and say, if I want to partake, it's an aggressive entry. I'm going to do less contracts. Or Roby typed in next, right? But you've got to make that call, but you've got to be thinking about that. If 70 to 80% of all stocks move in the direction of the S&P 500 and you are fighting the S&P 500, I'm not saying you're going to lose. You're going to win 20 to 30% of the time. But 70 to 80% of the time, you will fail in that trade. Take the dang trade the way that it's setting up, right? Take the right setup, the correct setup, the right way, right? That's my model for it. Is I really want to do, I want to have the best alignment of stars, if you want to call it that, but I want everything in order before I go ahead and take that trade to give me the best opportunity. If I want to take it anyway, let's say that it does move right up to the area. Fib line, moving average starts backing off. The S&P is moving higher. The VIX is dropping down. And you still want to take that trade. I'm okay with that. Maybe do 1 or 2 contracts, 3, 4 contracts. A smaller number than you normally would. Right? Reduce your risk in the trade. You still have exposure. So if you get the move you want, you're on the right side of it. But I don't want to put too much risk into that. And how much percentage is Apple in the S&P 500 exactly, Jim? It's probably, I haven't checked in a long time. It's probably still about 14, 15% is what my guess is going to be. If anybody knows it and you want to drop it in, by all means. All right. So that's even a bigger point of it. And remember, they've played around with the numbers. So Apple shares don't really reflect all of Apple's shares. There's some kind of factor they're using now for Apple to not make it look so big, which is ridiculous, right? Which is why, and almost our entire training this weekend was on iron condors on the rut. That's why the rut is so valuable, because there's 2,000 stocks. And man, you ain't got a big move on 2,000 stocks. There's no one stock that has a big move. Impossible. It's impossible. Right? 2,000, what could it be? If you're 1%, that would be 2,000%. You can't. It's tiny percentage-wise. All right? If we look at AMD, right? Our moving average is in the middle of nowhere. We look at Amgen. I mean the Amazon. I like it. No, my bad. I'm looking at the candle down here. I'm thinking we're up here. I don't like it. We're in the wrong order. Moving averages are bearish. Not excited about this at all. Booking's not bad. Booking's not bad at all. We're not that far away with the moving average. Today was a good stretch up and a fail. I mean, what happened on booking today? If you went up and it stretched to 294 and you let it come back down to 290, 288, and you got in at 288 and it's now at 174. You got a 14-point move to the downside there. Yeah. So Amazon, Erica, I thought this was the last candle. I saw this and that right there. What I was talking about, the stock is in a bullish bias. The moving averages are in a bearish bias. They're upside down, literally upside down. There you go. So Jim said Apple is 6.98% of the S&P 500. Costco, moving average is middle of nowhere. Nowhere. Nope, not interested. This is okay on Home Depot. It's not great. MasterCard, nope. Well, depending on how long it takes to get up there, as the stock price starts to climb, moving average is going to move up. So we may wind up with a confluence of the 379, 380 level with price, depending on how long it takes to get there. So I would like it a lot if that were the case, but I need that to happen first. Meta. So Meta's not bad. And when I say that, we've got a fib line right there. We've got 2 moving averages right there. So from that standpoint, yes. But then what? Then I got a 300 right below it. Now, if I wait to clear the 300, man, now I got, I'm up to 304, 304 and a half, 305 before I'm out of this trade. I'm getting in below 300, 299, 98. Yeah, I don't know. I'm not excited about the overall pattern. On which one, PK? Which stock? Is it on Meta you're talking about? Let me know what symbol that was. So I'm not very excited about Netflix right now. It is bullish in a bearish market. I like, who's this? NVIDIA. Oh, but I always like NVIDIA. I like NVIDIA. 8 moving out. Look at today. Look, here, watch. 419.38. $419.38. Did I do it wrong? Come on. So I don't know why. But I've gotten a bad tick on the data here on Omega charts. I'm assuming it's Omega, but it could be on TradeStation. But one of these, it didn't make it up, right? Okay, good, Roman. Appreciate that. So the reason I pulled this up was when I saw this wick stretch and we failed. That was awesome. I wanted to see how it transpired on there, but I'm not seeing it having hit up there. So didn't really do what I wanted it to. Roku, love Roku. Here, pull up to the 58.72 and fail. 55.51. So if we were going to go buy options on Roku, let's see what they go for. Right now, with a full week of time left, minus the couple hours we've already spent. Roku. All right. I want only 20 strikes. Okay. So if I'm looking for puts right now, I want to find puts that have a 65 to 85 delta, at least 100 open interest. I've got a 66 delta right now, 321 open interest. I could take that trade for $6.55 right now for my downside move. Okay. So $660 to buy one contract. Right, Erica's like, yes, Roku, my jam. I know, I love it. I know, we've talked about this. I'm a big fan of it. Big fan of it. Right? They are getting a little bit light in price, but it has great moves to it. So, guys, you could buy $6.50. Say it costs you $7, just so it's easy math, right? If it moves up to 58.75, gets down back down to 58.5, 58.25, you're in that trade. You're out at 55. Say you got in at 58 to 55, 56. You got a $2 move with a 70 delta. Yeah, it is overpriced, Erica. I saw that. Right? It's just market makers taking advantage of the move. But you're talking about a $2 move, $6 investment, $2 move, 33% for the day. I'll take it all day long. Right? I love the setup that's laying out here on Roku. Right? SPY is not really giving me anything. Well, it's not today, but if we, again, look where the moving average is. Pull up to the moving average and fail. Yes, I'll take it. Right? Square is good. It's still moving down, even as the price goes up. After this gap here, the 8's still going to continue to drop down, even if we climb up a little bit. Big move, no. Climb up a little, yeah. Tesla. Woo! They got slammed, baby. Slammed. United Healthcare. I'm not crazy about the pattern. I love the setup on W Day. Stretch me up, baby, to that 208.56 and fail, and we're good. We're good. All right. So moving averages, when I say don't trade without them, it's not just things like moving average crosses, which I introduced you to before, right? It is alignment, confluence of moving averages and our fib lines. That, ladies and gentlemen, to me, is what it's all about. Right? Good. Jennifer said, good to watch / listen to you. Well, I appreciate it. Did you guys get some good stuff from this? Let me know in the comment section down below. Give me a thumbs up, a 1. Words are nice. All the time. Thanks, Erica. Awesome stuff. 100%. Yes. Cool. Lots of yeses. I love the medal. Thank you. Appreciated. Great class, Rob. Good. That's awesome. All right, everyone. We are at our 1 o'clock mark. So listen, Lee dropped some links in there. So go ahead and get registered for some of the trainings that he's dropped in there. If you're interested in the Omega Charts moving average template, by all means, grab it. And I will see many of you this evening in 2.0 live from New York. All right, everybody, have a good day. God bless. I'll see you soon.